And joining me in studio is Muzuetu Matema, an economist from KPMG, and economist Francois Stoffberg via Skype. But gentlemen, thanks so much for joining us. It is a glimmer of hope, rather, for South Africa, because as you were saying off air, we've just had bad news and bad news after bad news.
Yes. Good evening, Cindy, and good evening to your viewers. Yes, it's quite optimistic, that marginally optimistic actually, that the Reserve Bank has revised the growth forecast from 0% to 0.4% and up to 1.2% in the outer years. But at the same time, another good story that came about was inflation growing below 6%. That's the figures that came through yesterday. So it's been quite a very optimistic week. The markets have responded likewise as well. Yeah.
All right, let's get a reaction from Brett, who's on the phone. Brett, just a reaction from you with the announcement of or rather the announcement of the repo rate today, essentially giving a little bit of a relief to the consumers. I'm sorry, it's economist Francois Stoffberg. Hi, Francois.
Yes, no, thank you for having me. Yes, well, we're happy with the decision. It was not really the environment where you would have wanted to increase interest rates as of yet. But we still hold to our guns, and what the governor has been saying over the last year is that we are still in a hiking cycle, and that we are in need of the hikes as well. And people often make the mistake of believing that an economy is just grown on consumerism. And in that instance, yes, you would want interest rates nice and low, but an economy also needs very strong investments and strong savings as well. And we know, as the previous speaker also said, we do not have an economy that does save, but you want the investments, because they do not only just give you a boost in short-term economic performance, but more so, it lifts the future prospect of growth in your country. You need new roads, you need new buildings, and for that you need higher interest rates. So we are still in this cycle. I'm glad he didn't increase it now, but we are most likely going to see another increase at the latter parts of this year.
All right, Mozi, do you agree with that? French is saying we most likely, this is too early to celebrate, we might just see an interest rate hike.
I think what I can add on to that is the Reserve Bank has an inflation targeting bracket of 3 to 6%, and we are marginally just below that at 5.9%. At the back of less pressure coming from fuel prices. Now, if fuel prices have to adjust in October, as we are likely to expect them to adjust, that means we're likely to trickle back above the 6% bracket, which will mean that will necessitate another adjustment in the repo rate. Hopefully not.
Yeah, no. We know with the Reserve Bank's mandate of having to keep inflation rate in that particular bracket, Francois, that it's probably going to be a very marginal basis points if they do increase. But just again, what does it mean for consumers? You were saying that maybe it's time that we're compelled to save by having higher interest rates. What do you mean by that, Francois?
Yes, it's a good environment if you can increase rates. We're not going to talk about normal and what is normal. Things have definitely changed. There's been a structural change since the recession, and a structural change driven also by political instability in South Africa. So normal is not the word anymore, but still you want an economy that gives you good yields and good return on your investment, and you want to motivate people to invest. Remember, if interest rates are too low and we have negative real interest rates that we don't have now, but in the instances where we did have that, then you are helping the consumer at the cost of the saver. You actually want to the other way around as well. Sometimes, if you want to boost investments and future the prospects of future growth, is to have the consumer pay, or the guy that borrows, and in favor of the guy who is investing and saving into this economy. So it is not nice for the consumer who is very debt-laden, who is burdened by a fancy, nice Mercedes that he's driving and that he has to pay off every month, big mortgage that he has to pay off, credit card debts, etc., because all these debts get a bit more expensive. But we've seen over the last year how credit extension to the private sector has slowly but surely been decreasing. It's only increasing 2% annually. So it's also showing that the consumer is not really in a place that is asking a lot of debt. So that is also a favorable instance to start increasing rates, although it might squeeze borrowing towards the consumer even lower, and that is also not a very good thing. So they are in a difficult position, but the consumer, I believe, will slowly but surely realize that he cannot go getting all the debt that he's used to, And then it's that process of tightening the belt a bit more.
All right, Moses, just very lastly, GDP being revised from 0% to 0.4%. Is this something that you think the economy can build on, or is it too early to call?
I think the problem with us being in such a low growth phase is that we don't have the employment multipliers that we need in the country. We don't have the fiscal multipliers that we need to build much on that. But still on that GDP growth phase, an important date to look out for in end of October when the government announces the midterm budget review. There will be another GDP figure that will come out of there, and there will be also government's expenditure plans that will show what government's intend to support the economy through expenditure. But Cindy, if you allow me the time, I just wanted to have make a comment on the impact of the inflation figures on consumers. One of the key issues that we worry about at KPMG is how inflation, how households experience inflation differently. If you look at yesterday's Stats SA figures, the lower household inflation is actually at 8.8%, and then it starts to decline for each household as you go upwards. So the big issue as well is how do lower households experience inflation, and they experience inflation at a much higher rate than the 5.9% that is announced, which is an aggregate figure.
Yeah, I suppose giving credence to the argument, the rich get richer and the poor get poorer.
The poor are squeezed much harder
but we're going to have to leave it there. Muzi, thanks so much.
Cindy,
indeed. That's Muzi Matema, an economist from KPMG. Economist Francois Stoffberg joining us on the line as well.